Hey traders, what's going on? Jamie Saettele here, SB Trade Desk Midweek Strategy Webinar. It is July 6th, and we've got in just a few seconds here. I got a crude oil chart up. I'm going to see what happens with the inventory number here. And let's see, inventories. Not a whole lot going on in the chart. What happened to inventories? Let's see. Should have just come out. Crude's popping a little bit here. There's the number. Is there a number? I don't see a number, but I guess the number, I'd just like to know what the number is. I don't really trade off that. As you know, I trade off the levels. But whatever. Crude's holding up. So, okay, here it is, inventories. Okay, so fell 63,000 and 2,000 estimate. So, you know, it would be a bullish number in theory, but we've seen crude oil, any market for that matter, kind of does what it wants to do, right? In any case, positive on crude. Given the impulsive rally, if you were to get a move down to 44, I'd still look for support there. I don't know at this point if we're going to get it. We got to 44.50 right yesterday, and we've popped up a bit. So all in all, you know, positive on crude from here. Probably next level 47.80 or so, then up to 50, which would be the upper parallel, just a trend line from April and the May highs, late May. All right, so please let me know here that you can hear me, and I haven't gotten any comments yet that I am being heard. So please let me know that you can hear me and that you can see the screen. All good, says Pete. All right, great. Okay, so I'm going to start here with the dollar. If we look at a weekly chart of US dollar, all the way back to early May, up week, down week, up, down, up, down, up, down, up. Yeah, so we've been alternating up weeks and down weeks for 2 months. And even though, you know, it's strange, right? Like the market, the dollar's been in a downtrend, but it doesn't really feel like it at this point, right? I mean, you're still trading at the same level we were in almost 2 months ago. You know, so I mean, it's been a herky-jerky trend at best. And there's just kind of these pockets of weakness that take hold. You know, one was the prior weekend, and this week, pretty much on Monday, which of course is the day before the July 4th holiday in the U.S., where there's, you know, not much liquidity, very light. And of course, you get a move higher in the dollar that takes back much of what happened the previous week. So this isn't really a market to kind of like overstay your welcome, to say the least. My general, you know, sentiment bias here, what have you, is still lower in the dollar generally. You know, kind of, I guess the best way to say it is I err on the side of down, of lower, until, you know, we get reason not to be, like until you get, you know, some more constructive action. And so I guess we could talk about what that might look like, what constructive action might look like in the dollar. So, you know, in the near term here, going down to the 4-hour chart, still following the Schiff slope. You know, the 75 line continues to hold. I really finally thought that last week we would actually just kind of continue, maybe go into a little blow off weakness on the downside for the dollar to the lower parallel and finally test that election low before you got a bigger recovery. But again, just not a market that wants to, not the environment conducive to, kind of extended moves, if you will. So, that's it is what it is. At this point, where's resistance for the dollar? I don't really have much where we topped yesterday, so I'm skeptical on just straight downside continuation from here. If we look at, say, zoom on in to even a 60-minute chart, you could envision something like this is a 1, 2, 3, 4, 5. Perhaps this is A, B, and then you're going to do a C wave lower and a flat. That could be a possibility. I would, if we were to get, something of a kind of a deeper pullback here, right? I would be watching for support probably down on this 20 on this line here, okay? Which, as you can see, you have had some counter trend moves off of that back at the end of May. It was supported in early May as well. Just a pretty good dividing line, right? As far as bull, bear, short term. So, could be getting, a move lower down towards, I guess that would put you around 12,100. And then you get yourself a final pop. And if we were to do that, it would probably be looking at resistance. I don't know if you can get all the way back to 12.2 or 12.4, but just let it play out, let it get fluid. The main point here is that you do have something to watch for on the downside. In the event that we pull back here on the dollar, you might actually be in for another pop higher and even a test up here. Okay. Bottom line, though, the near-term picture, the near-term picture is in like the next, I would say, day or couple days, does still look to me like it's lower from where we are, right? So that would be, again, down to about 12.1. So we're currently 12.146, and, another 50 points on this. You probably get, I would think you get a decent pop in Aussie pound. Euro, it's already popped. Dollar yen's really doing its own thing here. Not sure what the hell's going on there. We'll look at that in a second. But that is the deal with the dollar just generally. Okay, so what about euro? So we'll bring in euro. First, just a quick, broader picture, right? Scroll back on the daily. So this is linear. The linear chart it's actually been better than the log chart. And, you can see down here, the 75 line was great, right? Support early this year and in December. And so eventually I do think we get up to the 25 line, which would be, way up here. I mean, it could be, depending on when you get there, it's, probably above 118. In the interim, though, the kind of rate of change and the speed of the advance here, I posted this, I think, last week. I think this is probably nearing the end of a third wave within the rally from January. So 1, 2, right? 1, 2, 3, 4, 5. That's your 3. Okay. Now could poke a little higher, right? I remember our target was 1460, and we were trailed out at 1380, but 1460 region could still be reached. If you look at it on log scale, you've actually just met the median line, because log scale is gonna be a little bit different, right? But again, you can see that on log scale, this line hasn't been nearly as influential, right, or useful for that matter. So you did have kind of one thing here, but other than that, back in 2012, there's not a whole lot going on. Like, it's much, much cleaner on linear. Okay. So just, it's kind of a top warning and, a near-term top warning. And again, this is the analog that's been so useful as far as staying with a certain bias and not trying to fight, the move higher in euro. But this actually suggests that it might be time to actually do that, right? To start to think about fighting it. So, again, this is the mirror image of 2004 forward. So this actually says that right here puts you the opposite of back here, which was actually also the first week of July, interestingly enough. So we're saying that, just back here, we were in for a bounce that lasted a month and a half or so. We could be in for a dip that lasts, into mid to late August, and then go higher again in euro. So that, to me, that's kind of what I'm sticking with here, I guess. Bringing in the shorter term charts, was looking for, would have been interested in buying if we got back down into that 112, 80s, 113 region, which was simply the election high and then the high back here, parallel that, was so useful. The parallel above that, which is what we entered the long on last week, right here, could be very support, in the interim here. So watch around 1370 or so. You've got 1415 up here, which is where you opened, this week and this month, July open. I wouldn't be willing to sell into that just yet. However, if a few days ago I would have, if the levels would have worked out properly, right? But again, if we were looking at it like this, right? So let's say that we have 1, 2, 3, 4, 5, A, B, 1, 2. So what we want to see is a 5-wave rally from here, right? So 1, 2, 3, pull back 4, maybe a 5, maybe an NFP pop or something like that, up into close to the highs, and that would actually be something that would be at risk of failing and rolling over. Okay, so, I know this seems like I'm trying to get real cute here, but the point at which we're at on the analog and everything does indicate kind of reversal risk. So, I tend to kind of feel like fighting this move a little bit on cable. All right, or sorry, on euro. Those are kind of the levels to pay attention to, though. I think just the slope really been useful, and if you're gonna fail somewhere, it's gonna probably be on this median line, because again, that was a very important level on the way up. Right, May 30th, big support back here. In April as well, after the first round of the French elections, that big gap higher. Okay, let's go to the British pound. So the British pound, as far as the analog is the same thing. I did some updates on the long-term page this week, but the analog that we've been following, which is the comparison with the low from 1989, has actually kind of run out of time, and it says that you're at risk of a pullback here as well. However, I'm still willing to kind of give the benefit of the doubt to the upside, because the level is just holding out really, really well. Hold on here. So this is the level I was talking about last night. In the update, you can see the next level of interest, probably about 131.20, and that's the high from back here in September of 2016. Lo and behold, it's also the post-Brexit low. Okay, so 31.20 is a big area, and I want to be currently we're trading 29.50. So, I'm kind of willing to be err on the side of the long side, if you will, just to get to take advantage of the test or the run into that level. You have the coinciding with the median line up there. I guess that would be kind of next week. So want to position long. If for some reason we are triggered on this and stopped out, because I'm looking to buy it like 29.05. If we're taken out, then your next area of support, and I'll move into just and also, folks, you have the long-term trend line up there from 2014 to 2015. This is linear chart, right? But it's played very well. You have had very good influences on this. We've highlighted the importance of this line here, the 25 line, the median line itself, which was resistance back in September of last year on the into the crash low, and then the acceleration through it here on the day that the early election was called. And for now, willing to try the long side because that high is there, and we also have I have it on the other chart, but we also have a very clean parallel, right, that crosses some good pivots, right? So therein is why not try to be long into 29.05. Cable does do its stop runs, so wouldn't be surprised to see it try to make a run for the lows and then turn up. But yeah, that is my story with cable. Again, if it does fail, the next level for support is probably going to be 28.17 to 28.30, which is just the highs from back here on 6.14, and then the lows from 5.4. Okay, and then a square root level is right there as well at 28.32. Okay. Aussie dollar, I have support here now. Got a good bounce off of it, but it did fail, so that's not a great sign. It failed at 76.14, I guess, last night during Europe. So, this may not work out, but I still think you get a bounce based on the fact that you can count a 5 down here. So I'd be expecting at least a retracement, much like euro, or much like U.S. dollar. The index has has rallied in this impulsive fashion, and also appears to be maybe needing a C wave drop, which would be a fairly sharp drop, and you'd get a nice bounce in Aussie. Okay, but I don't want to miss the big picture on this either, right? So this is the short-term, structure, just kind of using it to just position long at a low-risk area, which is all we can really do in order to, at least be in a position to take advantage of the broader, C wave potential higher that literally could rally 1,000 pips. All right. And that's this. Okay, so the very clean triangle, sloppy as all hell with the waves within this, but that's what triangles are supposed to do. Okay, A, B, C, D, E do have a 5 up. So in the event that we get a pop, my personal the way I'm going to do this is I'm just going to raise the stop, okay? And if it wants to just go, then great, right? I actually think that it might not, and that you could get a failure and then another drop down maybe to 75.35 or so. You can see that's this parallel too, right? So parallel that goes off of lows back here from May of 2016, crosses a low from November 2016, and crosses through some of this price action here recently. Then, of course, you have the low from 622 at 75.35, and that would be your fourth wave of one less degree, right? So 1, 2, 3, 4, 5. And, you know, maybe we get a little A. Maybe I would think we're at the end of A, if that's indeed the case, because again, you've got an impulse down from this point anyway. So I'm looking for a pop, you know, a decent pop back up into this region, and then you might see failure, another run down here, get really tricky, really nasty, and then it can finally go on its merry way up here. So, you know, looking way back to 2011, this is the resistance you've hit. Okay, from the parallel that's back off the 2011 low. We've hit it a couple times here. Hit it, well, really, I guess the first time you really hit it was on 630. But you know, if you extend a parallel down off the January 2014 low, you hit that back in March. But this is certainly, but you now have an upslope. You can see here, right? Where you haven't had that before. You haven't had that before. So yeah, I'll draw that later. Anyway, that's Aussie. Should have a pretty good. Even if this stops out, there's going to be plenty of chances to get into Aussie. There are plenty of opportunity to get into Aussie. Chances we'll try to obviously identify ahead of time. What's last week's low? 61, yeah. So the stop is just under last week's low. All right. Kiwi. This is one I like the short side. You know, I think I wrote a couple days ago that if there was one currency I disliked more than the US dollar, it was actually the New Zealand dollar. And, you know, and well documented the reasons for that. The main reason, well, I guess the main reason is always got to be price, but when you see like literally people falling over themselves to buy something, you're probably towards the end of that move and you're about to go the other way and exert some pain on all the traders that have bought into this advance. And you can see that we now have the record long. Now the COT data for New Zealand dollar does not go back far. That doesn't mean it's not useful. It only goes back to 2014. But we do have a record position, and even if this is like not the top or a very huge top or, you know, major top, it still could be a top that gives you, you know, 3 to 4 to 5 weeks of downside, right? So you can see the record specs long, record commercial short, and then been focusing a lot recently on the max changes or the changes in the you know, in the positioning. So the first, this is just 1 week change in positioning. This is 4 weeks. And so not only do we have the record, but we also are near a record. We were a record the prior week for the change in positioning, right? So people not just being really long, but also buying the hell out of it. So that's pretty important right there. That's an important thing to note. And looking at the price chart, still have a very nice looking price chart here. I still think that the entry could very well be up here, might be tomorrow on NFP for all I know, 75.15, 75.20, right? So we now have a parallel to trade into, okay? High volume level up here, 73.20 is also the weekly reversal level. You've got all kinds of divergence and everything else that we've talked about, you know, time and again, divergence. Did we go to a new high this week? 44.9. No, we did not. Almost. And also, we've got a a new analog that we're following. So this is copied from, see this price action here back to 2009. You see that drop like that? We could be right here. Okay. Perfect? Not, of course not perfect. Nothing is repeats, perfectly or whatever, but we could be looking at a drop back towards 70, 50 or something over the next month or so. So a 200 pip drop would actually put you right back on support from the parallel, the blue parallel, which is kind of the level that we wanted to buy way back in the beginning of June, right? So we'd be looking at a drop, down towards 70, 40, 70, 50. And if you were to get that, it's the same chart here. I want to see what the retracement would look like. Well, 618 would be 70.20, so probably a little more than you'd want to see, but because the parallels at that point are higher. But you do have this is a high here, 70.50, right? So I can certainly imagine a drop that takes about a month back to 70.50. You're going to have a first stopping point probably around 71.80, which is the median line now. And drop, little bounce, another drop, 70.50, and then you can go higher. So that's my working assumption with the New Zealand dollar at this juncture. And yeah, it's pretty clean. I really like the short-term possibility here of trading back into this red parallel, which again was such a clean resistance level and support level all the way back into May, right? Right here, 621, big time support all the way through early June, late May, right? Mid-May. It's just based on the original trend line right here from the May low. And, that level right here is about 72.30, might be support for your bounce and then the trigger short right here. Okay. Okie dokie. So that's a good one. Ideal entry would be a spike to fade on NFPs. Okay, dollar CAD. I mean, there's absolutely no change to everything that I've wanted to, or that I've talked about or wanted to do here. We got out here, which so far has been a mistake. Probably should have just tried to let it run. I mean, but the idea is to get back in on any sort of, consolidation bounce. I mean, you've had a little bit of consolidation here, right? You took out the high yesterday all the way up at 30.14, came back down. You do have a parallel here that we've stopped on. I had the systems turned on for dollar CAD, and so when you were getting these alerts for these red dots, you were getting short alerts, right? If you do the alerts, but those were being sent out. But yeah, my best guess on this, on dollar CAD right now, is that it's going to be either up on this parallel, right, which crosses 120 and these lows here in March and in April, and that's going to be up on in the 30. Well, if it's tomorrow, it's 30.60, or back near 30.90, which was simply the very long-term support line. You can see it here, right? So it's off here, support last year, and then if you got back up there, it would be the level to watch for for resistance again. So it's a nice little window for resistance. Okay, and it's probably going to be one or the other. I doubt you stop in the middle of it, right? It's probably either going to be you stop at like 30.50, 30.60, or you stop near 31. Okay, and then the next downside level for this, I don't think it's down until you get this low way down here, the June 2016 low, which puts you down near 26.50, okay, or a little bit lower. All right, what about dollar yen? And by the way, well, there's actually a look at some. There's the CAD cross, Euro CAD. Going to be really interesting. Remember that was we had a good short there last month, and I think we probably have an opportunity to short it again. All right, so here's dollar yen. Again, I don't have a whole lot to add here that hasn't been said in the swing updates. It's just, I mean, it really is respecting this upslope, right? So here when we turned over and we cracked the median line, I figured that you would get a spike, we'd get 12.45 and then it would go. Well, we opened up Sunday night at 12.08. So we opened up on a down and then we had a gap fill. So I was like, okay, fine, we're going to go lower. Finally go lower because the Nikkei was rolling over and everything. But bonds have been really weak. So you've got kind of a counteracting there with, the Nikkei is weak. You can see the Nikkei is right now down 145 points. It was down a lot more earlier. Bonds, though, are down huge. They're tanking. They've been tanking for the last week and a half. So that's a problem, obviously, for any sort of dollar yen short position at this point. And until that changes, being short dollar yen probably going to be really tough. It's going to be a fight. You're going to have these sideways consolidations and it's going to come right back. A place to fail is now, right? I'll say that again. 113.36, 50% of the entire move, okay, from the high this year. So we've retraced 50% of the move from the high. And then, of course, you have the line that extends off of the, the March and May highs. But there's just no setup at this point, except for being short and praying, which is not a setup. So, might need to get another thrust higher on this. I'm not totally sure, but it's not really going along with general dollar direction, right? Dollar yen is doing its own thing, okay? Doing its own thing as it often does. So we shall see what NFP wants to bring. At this point, a high volume level reversal or something would be a good indication that, maybe the dollar is rolling over against the yen. Here's yen. You can see we had a high volume level yesterday. All right. So if we hold up today and then tomorrow we hold up, which would be staying lower dollar yen, then, probably be willing to try to short once more. And it's important with this to look at the, some of the other crosses, right? So Euro yen, one we had last night in the post, in the update. Go to the daily chart. It's getting really close. You can see where we got support last night, or today, I should say. Right on that bad boy. It's a good parallel. That's very precise. Or that parallel is very precise. 129.65. Again, that's the 50% retracement of the decline all the way from 2014. This was one of my best trades ever. We're shorting up here, literally shorted like right up here, at like a 20 pip stop. That level is also the low to the tick of November 2015. So, you've got a horizontal level there as well, which is always, always a positive. So yeah, just kind of looking for some sort of exhaustion in, I guess, the yen moves generally, but Euro yen could be a very good one if we do get a response up here. Again, I'm not trying to pick the top on a trade on this, and even a decline, probably I think you come back here to 25.80 and then you go higher again because this is a very well established trend, right? But within these trends, you do get, you can get sharp counter moves. And I think we're probably at a place where we're going to see one of them. With the yen in general and some of these crosses in particular, like Euro yen. So yes, let's see if we can get some exhaustion around 29.65, get some reversal action, and then we'll plot out a trade plan if all goes as expected. If not, then, no harm, no foul, move on, do something else. What about pound yen? Pound yen, again, really quite bullish. Bigger picture, near term, might be a bit long in the tooth here. I'm not sure if this parallel, this fork here isn't really all that exciting to me. Because you have the touches here, but that's it. I'm keeping it on here just in case we get a dump and we hold this. But the more interesting level to me is, this 145, 145.20 area. All right, your channel top, and it's always one of the best setups, right? Is to wait to get that pullback into a channel top, and then, or the former channel resistance, and then you just slingshot higher off of it. So, at this point, if we were to get there, tomorrow, it'd be near 145. Next week it might be close to 145.20, which is this level here, 630 low, and then if it's later in the week, next week it would be 145.40, which is up here. So we'll have some good options, I would think, with pound yen moving forward. Okay. And you could end up having something like a fourth wave drop into that, right? 1, 2, 3, whenever we finish, 4 into this region higher. So pound yen is more of a buy on a dip for me. And that, I guess, is a function of my thoughts towards the British pound and the euro in general. I think euro pound is trying to put in some sort of a top here. The 60, or sorry, this is a daily chart, but 5 down, A, B, so 1, 2, 3, 4, 5. Is it done? I'm not sure. To me, the big risk though is that you get a sharp rollover from here, because you've got you can count a flat. It's a very clean flat. You can count this flat, this A, B, C wave, rally. So, being short euro pound is quite difficult, I think, up here, but maybe erring on the side on the crosses like euro yen and pound yen, of maybe the short side on euro yen up here with a huge level of 29.65, and then the the long side on pound yen with a dip coming into a very well-defined price region maybe is the way to go. Okay, so that's my playbook, if you will, or my plan when it comes to kind of a combination of the yen and euro and pound. Okay, dollar Mexican peso. This is an interesting chart. So we may have put in a fairly important turn here for the peso. Okay, peso, right? Parallel. Be looking back towards about 1950. And if I, look up intraday, we can count ourselves a 1, probably a 1, 2, 3, 4, 5, right? So any sort of pullback is really a candidate to buy in the dollar Mexican peso. If we're putting in a minor top here, right? Look, I'm just going to kind of concentrate, I think, probably on this region here, about 1807. But if we were putting in something of a, a minor top with this, you're probably looking at, see if this has any structure to it. It's okay, nothing worth writing home about just yet. But yeah, we'd be looking for a pullback to hold, let's say between 1803 and 1811. Okay, so the peso is one that, if you're a little more on the wild side here, it's not for everybody, right? Trading would still be considered an exotic, but it's one that, I love the setup based on the chart. So it's a good chart. Sarab saying, do we have gold, silver, copper, and oil on the list today? And we got on whatever you want is on the list. All right, whatever you want is on the list. So we did look at oil earlier. I like oil higher. Again, if what is this from? This structure. This is from simply here. Okay, this is the April high and a channel from the May high, and then we're extending that lower channel from the May low. And you can see that you have very well-defined levels on that, right? Low was made on the lower channel line. This line here, which is a 75 line, was important. Resist support on the way down, then it was resistance in the final low, and once you broke above it, it was big. So if you drop back there, it should end up being support. I'm not sure, but at this point, I don't think you probably get back to that level. So I'm positive for oil back towards at least 50, which is the top of that channel. Okay. Anything other than that, I don't have much conviction on, nor do I have the desire to try to figure it out, because really it's, oil's been in a very volatile, tight range, right? So if we look at so this is a big picture weekly chart, and you can see we hit a really big level on that low at 42 bucks. 42, right? 42 back to March 2015. So to me, this is up, sideways, and then up again, but A, B, see all this overlapping nature, all this overlapping stuff from here? I'm thinking A, B, C, looking for a D, and then an E in a triangle. Okay? So if we can get something like that, 618 would be back at 52. Okay? And then you'd be looking for a final pullback before you'd really want to take oil seriously again. Because at that point, you'd be looking for your next, motive wave, if you will, or your next directional move, and, quite possibly an impulse. So really, that's kind of been my thinking for a long time, is that everything from June of 2016 is a triangle, right? And that's the overlapping nature of it. Suggest triangle. Okay, it's okay that you have a higher B wave than A wave. That's actually quite common. Okay, so that at the moment is my thinking. So yeah, I would be bullish on weakness near term with crude looking towards 50 to 52. Crude oil we just did there. Okay, what about gold? Gold, obviously, I'm sure disappointing many because there's a lot of gold bulls out there, and until that changes, it's going to be disappointing a lot of people. So the next level for me probably is 1179 to 1190. 1179 lows going back to June of 2013. Okay, and you can see all the trading within that zone. It's very, good looking price region here. And then 1191 is the 618 of the rally from December. And that, it's where, if gold is higher, that's probably where it needs to go higher from. Okay. Near term is pretty sloppy, but that's to be expected given that it seems to all be corrective at this point. Silver, here's a weekly chart going way out all the way to the 70s. And, top side of the trend line back to 2011, 2012, it was resistance in 2016 in May, it was support in December of 2016. That's all the way down. That's even lower than 1468, but that might be where we need to go. Okay. So the metals aren't looking so hot right here, at least the precious metals. One of the things that I'll be waiting for, I guess, to signal that we have something more of a important low in the metals is going to be, another crazy COT move. So like, the commitments of trader stuff right now, if I go to silver, we don't have really any extreme. I mean, it'd be nice once they are a 52-week extreme, but they're still net long specs. Just a couple of weeks ago, we had that record short, change towards positionings on the short, but that was right after we were near a record on the long side. So, maybe another extreme move to the downside on selling would signal that we can finally get some capitulation low in the silver market and the gold market. Also stay abreast of the headlines. Watch for things like, that suggest that people are giving up on gold and silver. That it's not worth, it's not useful anymore for a hedge or whatever, right? Once you start to see stuff like that, you're probably towards the low end of the metals range. It's just not there right now, right? So I'll obviously do my best to alert you when I think that we're turning or coming into a big low. It's not there right now. So I just don't see it. What about, let's see. What do we have? Oh, copper. So we've been focusing a little shorter term. This was the copper chart from the other night. I think that if copper is going to be really positive, on a near-term basis, you're probably going to want to see it find support on this blue parallel, which at the time I suggested was probably about 263.55, because that's, it's been a pivot. It's also the middle of the entire range from the top back here. So this range that we've been in, this stretches like 282, to 242 and change. That is 263.50, and mid-range, just a good reference point, and then a parallel here. So you're looking for, we already have broader positive action coming off of resistance, however, and you want to see short-term positive action within, if we're gonna break out to the upside. So, the short-term positive action would warn you that that copper might be about to go into some sort of trend period. And if that happens, it would suggest to me that Aussie also is getting ready to do its thing and finally try to break out to the top side. So still watch down here, a little lower for copper, but that's a big area, 263.55, where I would watch for support to take it higher. Okay, we got a question on the DAX. The DAX has been a beauty as far as its parallels are concerned. I don't even know the last time I looked at the DAX, and look at that. So the DAX topped, looks like 2 weeks ago. The rally does look incomplete to me. 1, 2, 3, or sorry, 1, 2, 1, 2, 3. So I'd be looking for this decline to just end up as a 4. The 38.2 obviously is going to be your most likely bottoming point for a fourth wave. 236 is also a possibility, but that's 11.836. Pretty close to, you've got a lot of congestion around there, even going back to 2015. So let's see what the daily looks like. It's a little shorter term here on the daily chart. So on the daily chart, 1, 2 might be a 1, 2, might be a 3 down here, 3 down from up here, 1, 2, 3, 4, 5. So any bounce or consolidation in the DAX is going to be, is going to be worth a short, in my opinion. Yeah, I would just follow this up into this region. Putting in a little bit of a low here today, and if you got, finished off a little more downside to complete it, you're probably going to see support down around 12,240. So recall that level, 12,240. That's just a parallel. Been pretty clean as far as providing its support. But to me, this is also the line to sell up here. Okay, so don't want to chase it here. This kind of median line analysis and trading around or with these tools is all about trading around the edges, right? So you're trading at points that, you're really looking for, immediate market responses, and you're not wasting your time trading in the middle of nowhere. And at this point, I would think that you kind of have 12,240 as minor support, resistance up here on this line, wherever it may be. Just draw a line off the 2 highs up here. And then ultimately, more important support is going to be down near, probably the 11,800 range. Okay. and that would be a low to buy because you'd be looking to take it to a new high in a fifth wave. Okay. Are there any other markets or questions that anybody has? I'd love to look at whatever it is that you want to look at and try to do my best for you. Oh, I forgot one actually that I wanted to look at. So I will ask myself a question. I think EuroCAD could be a good sell again into about 48.20 to 48.70. So go to the daily chart, you can see it cleanly. Okay, so you see the low here from 510. Okay, that's up on this parallel, which was support, in June. And then, of course, the 75 line and resistance was 49.68 just above it, which we did talk about during one of these webinars a couple weeks ago. And then 48.24, 48.30 or so. That should be resistance now. I would look for resistance on this. So this could be a good one, to take advantage of maybe both euro weakness and dollar CAD weakness, possibly, right? It is a good one to look at. So I would mark down 148.24 as an important euro CAD price level. Okay, maybe for downside continuation within a drop that we're coming from really major resistance. I mean, this is 618 of the entire move down. Median line, all that good stuff. Still probably going to have support a little lower. So 48.24, you might be able to take it down to 46, which is the high right here from March. Okay, and then you've got the parallels there, the blue parallel. So it's a really good looking chart, really clean levels on the Euro CAD cross. Mahai asking, if the DAX is not complete, do you expect another top in the S&P? Yeah, don't try to, fit it all together like that too much because, I mean, let's be honest here, right? Like, what's been happening? The DAX top 2 weeks ago, right? The S&P top 2 weeks ago, but it hasn't hardly moved, right? The DAX is off a lot more. We're still up at this level in the S&P. The S&P, look, if you're trying to be bearish, the U.S. stock market, it would seem that tech is the way to go. We've got the S&P kind of languishing below the highs. NASDAQ is, really come off a lot more, obviously, right? Here's the Qs. The Dow is at a new high like 2 days ago, right? So, it's certainly very selective at this point, and if there's something to short, it's the NASDAQ, and I'll give you a structure that I'm kind of been following. So here's NASDAQ futures, right? So I've been trading on NASDAQ. You can see the 75 line, 25 line down to the channel low. I mean, it's kind of picture perfect here, right? So if you get any sort of, this is a pretty volatile market right here, but the big break comes when you break below the channel, right? As we know, when you break below the channel and come back and test it, it should be resistance. So that is a really important thing to watch for or be aware of. And then here's the Qs. And if I go to a daily chart, again, this is pretty much the NASDAQ. but there's big potential support down near 134. We'll call it 134.60, 134.70. Okay, if you get down there, you may very well see a decent bounce because it's a channel. It's just the channel. It's within a channel back to Brexit of last year, and all things being equal, this is an uptrend, and you have 3 legs down. So it's an important level. If you get back down there, I've already got 2 equal legs actually down today. Today's low, so for all I know, this is over. But if there's a place to try and be short the stock market, which to be, has not really paid ever, then I guess it's paid like a couple times in history. People are obsessed with trying to do it because they want to be right when everyone is long. But it's kind of a fool's game, it does seem like, until we get an obvious blow off. We haven't had a big blow off, right? Except for some of these FANG stocks or whatever people call them, Facebook, Apple, Amazon, stuff like that, Netflix, Google. We haven't had a major blowout with public participation really crazy, across the board. So it's not time, I don't think, yet for the big short, right? Little shorts here and there, totally go for it, right? But nothing crazy yet. Can always watch Apple too. Apple's a pretty clean stock as far as its channels are concerned. It's come off. It was obviously the previous big leader, and it topped in mid-May. So it's been, former leaders that are acting like, not that great. Typically a sign of, at least changing times. Okay. And we are really kind of coming into support from this median line here, which you can see resistance, gap, takeoff. So resistance was on the old support. So we're kind of caught in a range here with Apple. Eventually, this is probably your best argument for why the market has not topped yet, because you can see that you've got a 1, 2, 3, 4, 5. So this is 1, 2, 3. This is probably going to be a 4. Okay, but the fourth waves are usually very complex, right? Much more complex than second waves. They tend to take a while, at least as much time as wave 2, and probably more, more often than not, they take a much longer time. So I would be expecting that, if you get a bounce off here, you're probably going to find resistance at a ratio, and then get another leg down or a triangle, right? So, A, B, C, something like that. But yeah, this is a good chart to keep in mind. And, Apple being like one of the largest stocks out there, is obviously one that you want to know what it's doing, or, where it is in its wave position. But yeah, bottom line, this still has, I think, one more leg up after it does whatever it's doing with this fourth wave right now. Okay. And what about nat gas? There was a question on nat gas. So nat gas, as much as I want to be broader bullish, I still, okay, so this is that chart here. I think I actually have a updated chart over here. All right. So pay attention to 262.70. This is the trend line back to the 90s, okay? And you can see, it was after it was broken, it actually ended up being support again and resistance for the most part on the way down. And if we take a parallel to that and extend it off to 2012 low, you can see you have an important behavior thing here. And you know what? We also danced around it and found a big low on it in February of last year. So if we get back down there, that's, I think, might be your golden opportunity to potentially buy natural gas, or at least be aware of it. If we start to find, see some positive near-term action, it could be a really great long. As it is now, I kind of have it in the middle of nowhere again. But yeah, this is the area to pay attention to, okay, for nat gas. Euro Swiss. currencies doing? Not a whole lot, are they? Not right now. Euro Swiss, let's see here. Euro Swiss, whoa, that's looking mighty positive. Mighty positive. This is a big deal. All right, so Euro Swiss. You see what happened here? Broke through, and then this ended up being support. Now you do have a 5 up here. This is a 1, 2, 3, 4, 5. So we're probably close to a minor top or something. But I would be like, I would make a note that, or set an alert or something, that Euro Swiss, if it trades back to say 108.25, right, which would be down on this trend line, okay, and on the top of this trend line, but in that general region, okay, and just to give you an idea, this is towards the end of July, and this would be towards kind of the beginning of August. This would be towards the middle of August, but yeah, 5 waves up, but very positive in that you have, after the crash, you've got, this move higher, a bull flag, very long, powerful bull flag that's taken hold, and now you've got a 5 up, and if you pull back into there, that's a buy. Okay, so that's a very interesting chart, and I'm glad you asked that question. So yeah, it's a buy at 108.25. Again, I'm not saying to sell it here, but you probably are close to completing 5 waves up from down here. Intraday, can you count 5 from here? I'm not trying to call the top of a 5 on this, but we have made a new high, so your minimum expectations have been set. But if you want to make life easy, just wait for it to come back into 108.25, and then it's a buy. Okay, you got a 1618 going on there. Let's see what else. Where can we go equal on this? Equal legs would be 110.30. Mahai says, will I trade it? I don't know if I will trade it. I might be long euro dollar and be long dollar Swiss at the same time, right? It's a very interesting proposition, right? So I can't tell you if I will trade it at this point or not. I will tell you that I'm very interested in it, and that it does tell me that, the euro should be stronger relative to the Swiss franc, but there's other ways to do it too. Maybe being short Swiss yen would be a trade, okay? I mean, there's a lot of things to do. Basically, you could pair Swiss on the other side of a lot of things. Maybe long Aussie Swiss, would be a trade. There's a lot of different things to do here. Some good information to glean from this chart by itself. Maybe it means that the SMB is about to change their, or do something, right, where they want to weaken the Swiss significantly. I don't know. Maybe they're about to do something. But yeah, it's a good chart to be aware of. All right, I've gone a little bit over. That's okay, but I really got to run. So really thank you very much for attending today's webinar. Thank you for your time. And let me get this up in archive for you, and have the charts out later in the update, and kind of talk about how I want to trade around NFPs, which is of course tomorrow, and wrapping up the first week of the second half here already. All right, take care, guys. Talk to you later. Bye.